Today is Tuesday, January 7th. It's 9 p.m. It's the Asian market. And yesterday I made a trade. And this trade was on EG. And what I did was the support was down here like that. And then EG was pricing around here like that. And it was here a little bit off of the support area. And so what I decided to do was get in small. And then it started to dip. And I thought to myself, okay, so my rule is I never add to a loser. But it was still above the support area. So I added, because the size was small, I added another equally small size into it. Eventually, what happened was it caused a large drawdown, but it came back to where the first purchase was made. So the second one that I bought, I was able to take profit on it. The second one, I sold it for uh, even, okay, for what I bought. So I thought to myself, there is something called an undercurrent. So there are things that are happening underneath underneath that holds the value. It holds the price at a certain level where there could be a structural variance, like a immediate support established by a bounce off above where the major support is, and it's called an undercurrent. So there's this major undercurrent that occurs, and it bounces off, and even though it passes through uh, the immediate support area, and so that gives me confidence into making holding on to a trade beyond where that immediate support fails. And so I thought to myself, now what are other things that could cause it? And when I was thinking about it, like earlier this morning, there were at least three things, right? One of them is essentially a support area, the bigger support area that does that, right? And so there's some other things that impacts it that gives me more confidence in holding on to a trade, even though it actually bypassed the. So it helps. It helps to hold on to certain things instead of being instead of being instead of being rattled by a trade that goes against me, because I'm thinking in my head that when I enter into a trade, I'm thinking, okay, so there's this green candle that is projecting to go up because it's pointing that it's going on a trend. It is established with that candle that is going to go up. It has established itself. But sometimes what the market will do is it'll reverse and then go the other direction. And that can cause me to prematurely exit the trade, thinking that my thesis is incorrect. But still, I may be early. That's why it's causing that. I may be early, and so there's an undercurrent. So it helps on each trade that I make to have a undercurrent that helps me to stay firm in my trade idea. Just saying to attaching to it. So anytime I make a trade, it's good to have an idea that my thesis has a supporting um, uh, confluence that says to me, "Hey, look, just hold on to it for a little longer because this is your other confluence that says that it's going to go in the direction that you want it to go." So I noticed that when I'm making the trade, undercurrent of idea or the confluence can directly impact on I uh, whether I abandon my trade or keep trading. Okay, hold on to it. Okay, hold on to it. It's like, it's like, it's like when I have something that's good. Now, this is aside from day trading, which is like if the mother to my children. I don't, right? Anyway, anyway, I don't abandon that. That's a lifetime commitment. Okay, it's a lifetime commitment. There's no change to that. That is a undercurrent, certainly in my case. Anyway, so that unwavering conviction allows me to hold on to and stick with it as long as possible until at a point where that undercurrent is proven otherwise in day trading. Okay, in day trading. Okay, on a personal level, that's a different story. Uh, but there's an undercurrent in day trading which says, okay, if it goes to here on the first level, I expected that it's possible, but if it stays above this critical area of certain, it's just like when I gotta make this trade here. Okay, all right. So what happens is that I heard this from like professional day traders. They say this. They say something called a flush. Okay, there's a flush that happens before it starts to come back up. And what happens is that it slowly drops, and then a steep cliff, and then what happened is there's a dramatic drop. Okay, just like the when the oil price of oil was negative, right? Because apparently it cost more to hold on to it. And then what it will do is it'll flush, but it will not break through a certain level. Okay. Certainly zero was zero was actually it was below that. So what that means is that there is a level where it will not go through. It will not. So what will happen is that it's gonna shoot right back up. Okay, because there's that logical confluence that says, okay, when it reaches this point, it's gonna reach right back up and then starts to climb back up, and it's gonna be a monstrous recovery before it starts climbing back up. And so it's gotta shake up the market and then starts going up on a microscopic level. On a daily basis, what I'm seeing is that there's an undercurrent. There's a rock solid undercurrent that says, okay, uh, the S&P 500, as long as the population keeps growing, is going to keep growing, and that's the law. That's how it happens. And so what I've noticed on many of the trades that I have is that when I have the ability to size small so that I can weather that movement down, and then when I see that the confluence is being respected, and then I can I can I can expect that trade to stay uh, on track. It'll recover itself, stay on track, and move into the intended direction that I had initially entered into the trade. The fact that I've entered based on a certain criteria that says, okay, this green candle is showing me that it has started its movement in that trend, but it is possible to pull back before it moves back. So there's a possibility that there's a pullback. Okay, even when it's moving up, there's going to be a pullback, and so the undercurrent is that the trend is this direction. So if there's a pullback, the undercurrent is actually the trend, and when it pulls back, it still remains in line with the current thesis, right? And so what I've noticed is that when I'm trading, there's a there's a there's a thinking, there's a there's a strong fundamental backbone of my conviction that says that there's an undercurrent, and that undercurrent will have a strong impact on the strength of holding a trade above a strong resistance. Okay, there's a weaker resistance, but there's a strong resistance at a certain point. Stocks cannot go below zero. So that would be, I mean, I'm just uh, thinking that way. I mean, I'm just saying that you can file bankruptcy, it'll just go to zero, right? It can't go below zero. It's zero. Stock prices will go to zero if it does go to zero. It cannot go below zero. It's zero. Okay? So that is a rock hard undercurrent. But there's also that when I look at this chart formation, I can see price actions. It bounces off a certain level, and then once in a while it'll entrench deeper, and then but it'll come back right back up and go to the first level of support. But if it has to dip down deeper, okay. So one of the things that I've noticed about EG is that it hovers around a certain steady state value for a very long time. and it hovers around it like that. Now, what happens to EU is that EU makes a drastic move on a very, very large scale. Okay, so it has a wider window of undercurrent. And then what I've noticed about UJ is that it is it can be all over the place. And when people say that it can't go any higher, it goes higher. If it can't go any lower, it'll go lower. I mean, it can streak to an immense amount of variance from one side of the rail to the other side, right? And so the the idea, so so the so the so the firmer, more powerful conviction of a support is less so on the UJ and EU, but on EG there is a strong correlation. Okay, there's a strong correlation between the euro and Great Britain. Okay, the Great Britain pound, British pound. So what I'm getting at is that what I've noticed is that there is a tier of there's a tier of confluences, and one confluence may be weaker than the other confluence, and that one confluence, even though it may be breached, as long as certain factors keep supporting the idea, just as an example, that pullback in a trend, it's the thesis is still alive, and there is a probability that the thesis is still valid. Okay, so I've noticed that it's an idea of an undercurrent. Okay, undercurrent uh, undercurrents divides and defines the confluences and places certain strength in those confluences, like the A plus and B trade and a C trade, and I think that's where that comes from. So, so the level of confluences defines. So this is essentially defining what an A plus trade is. It's it's defining what an A plus trade is and the distinction between an A plus trade between a B trade. That's essentially what it is, because certain confluences generates a higher level of probability than a confluence that is assigned to the B type of a trade. And so what I've noticed is that this is the first time that I've noticed. It's like, I suppose what it's like is that if there's a safety net, okay, there's like 5 or 6 different safety nets, okay? So, and I look at these 5 or 6 different safety nets and then assign certain scores to it to point to a certain location. But sometimes these safety nets can be uh, can have a inversely correlated results on a temporary basis. Okay, because the price action is telling me, okay, it's dipping down. That red candle is saying is totally against what the other theses, the confluences are telling me. But the strength of the other confluences will negate what that immediate candle is saying. And so even though there's a temporary dip, it's going to align, stay within the overall general confluences that makes up the thesis, and it's going to return back up. And so all I have to do, all I have this is a deeper level of thinking that I wasn't able to think in the past. It's just that there's a level of undercurrent, okay, that supports a uh, that supports a theme in my trading. Okay, so that isn't so there could be so there there's so there are strength to these confluences too.